Falling nearly 40% from all-time highs set back in January, how much lower can Tesla go? I'll explain some key levels to keep our eyes out, but before we get to that, there's the closing bell, guys. With the S&Ps finishing today up 72 points, we're seeing all major indices across the board up a nice amount. Just taking a look at the S&P futures, we saw a nice boost at 8:30 due to the non-farm payroll number come out from February. It was a nice number. We saw a pop, however, we quickly turned at the bell, falling into lunch. From there, we reversed and we trended over 100 points into the bell. Just taking a look at it from a daily, is the bottom in after having some 3 consecutive days of getting whacked? Today was a nice rebound, to say the least. And then when we take a look at the SPX on the week, we're finishing positive. We came into this week expecting 120 points. We were positive Monday, Tuesday, Wednesday, slightly for Thursday, came negative. We were negative this morning and we're closing positive. I'll get back to the SPX and discuss next week's expected move, but let's quickly take a look at the Nasdaq. And taking a look at the Nasdaq today, it was up 1.67%, falling a little bit more than the S&P and lagging our S&P by about 25 basis points. Is technology ready to put in the bottom? That's going to be the big question mark in next week's trade. Technology's fallen quite a bit since that high set back in February 16th, which was around the time the yield started to rise pretty aggressively. And as for the Russell 2000, it was our best performing index on the day, up about 2.25%. Some nice volume coming in here as the small caps are rebounding just nicely. Now, when we take a look at some of the sectors across the board, well, the XLE today led the way, up 3.78%, putting in a new all-time high. Volume is just pouring into this ETF. On a year-to-date, the XLE is up close to 40% on the year. Well, what else is up? Well, every other sector is in the green. We see the financials up close to 1.9%. A strong day out of the financials. On a year-to-date, the financials are up close to 16%. So energy and financials are two sectors that were really hurt in 2020, are coming back very strong. We see the XLK technology stocks up 1.9%. Some nice volume after yesterday's bloodbath. As for our big five, it's lagging it ever so slightly, up 1.66%. For those wondering, the big five is Apple, Microsoft, Amazon, Google, and Facebook market cap weighted index. Getting these stocks to bottom and going higher is a very big key in this market. And as for software stocks, they were near the bottom today, up 0.78%. However, software stocks seeing a nice wick. Will we be seeing software on a nice rebound? Now, when we take a look at our advanced decline lane today, 92 advancing and 9 on the decline. When you see these 90-10 correlations, you do not want to be short this market, as it's just going to rip your face off as the basket of indexes go higher. So you could be in a stock that you think should go down. However, due to the algorithms, these indexes just raging to the upside, the whole basket carries just about everything with it. Just taking a look at some of our sectors, energy leading the way, green across the screen, financials, technology, and the big five. Those are big components to this marketplace. And with software stocks up just 0.78%, consumer discretionary was our worst sector. So with today seeing all of our indexes to the upside, seeing the financials getting a nice bid underneath them, how did the bonds break down? And taking a look at these bonds, they're up 0.02%. So the bonds are hanging in positive on the day. Just taking a look at that wick, when we look at it intraday, bonds saw a nice drop. However, it hit a nerve and quickly reversed. Overall, in the big picture here in the bonds, we keep dipping lower and lower and lower. When are we going to get to a point when Jerome Powell says, hey, we got to step in here, this yield's getting too high? And speaking of the yield, taking a look at the TNX, it was up 0.25% today, hitting over 1.6% on this 10-year yield. We take a look at it on a 3-year candles, and we're sitting at levels around pre-COVID. Right around here, this 1.6 area. You can just see back around 2%. Can we get that high? There's still a ways to go, but the amount of move that this TNX has been making, we could be knocking on the door at 2% before you know it. And the higher this yield rises, the more it's going to open up these high growth stock names as money chases value stocks. But as for volatility, taking a look at the VVIX today, it was down close to 9%. Just retreating volatility. Looking at it intraday, it just collapsed right beneath the floor. Taking a look at the VVIX too, just selling off and selling off hard into the weekend. But however, overall picture, sitting at a 116, the VVIX by no means is very high, and it deserves to be this high in this environment. However, do we get back down under 110? Do we head towards 100? I think when we're heading that way is when we're going to see the S&P probably break 4,000, but in the meantime, we're just shuffling around. Speaking of the S&P, let's take a look at the expected move for next week and see what the options market is pricing in. So we go over to the trade tab and we take a look 7 days out. That's going to be next Friday's session. And the options market is pricing in $100.77. So I'll draw these levels in and we'll discuss next week's barriers. And you can see right here, next week with 100 points of expected move, 39.42 plays our upper edge and 37.42 will play our lower edge. If you ask me, it seems like the bottom could be in temporarily and we could possibly trend higher. Maybe we get to this 3,900 level. I don't think we hit the upper edge next week. I'm expecting it to be fairly quiet with a lot of news around what's going on with the stimulus deal. But here are our levels. Keep your eyes on these levels in next week's trade, as our midline for next week will be 38.41. So with all the indexes raging to the upside, what's going on in the dollar index and how did our commodities break down? And taking a look at the dollar index today, it was positive, up 0.34%. Looking at it intraday, dollar saw a nice spike, however quickly calmed back down. Overall, the dollar has been strengthening due to the yield rising. However, we are expecting a 1.9 trillion stimulus deal. Printing more money should, in theory, weaken the dollar. How did our commodities break down? Well, crude oil today was up close to 4%, and this trade has been on fire. Just 66.3 right now. Crude is just ripping higher day by day, largely due to the OPEC Plus and controlling the supply around this commodity. So even with the strengthening dollar, crude was still up large. As for gold, in the red, down 0.25% here. Gold trying to find a floor. It's sitting below 1,700. Just looking at it, just resting right below 1,700. You would expect this trade to do well. However, with Bitcoin on the block, a lot of traders and gold bugs are getting out of gold as a store of value and moving into Bitcoin. Taking a look at Bitcoin today, it was up 2.5%, sitting at $49.5 thousand. We could potentially be over 50K over the weekend. Taking a look at it, this 38% Fibonacci, you can just see this 46.8 thousand played a nice support and we just peeled higher off of it. I don't want to take too much off of these Fibonacci levels. However, it respected it in today's session, and for the most part, consolidating over 45,000 is what we want to see here in Bitcoin, and anything under 50,000 is a great buy. And if you're afraid to buy these levels, I suggest dollar cost averaging into a position. There you have it for the stock market breakdown. With the Senate voting on what's going into the stimulus bill, we could be waiting another 10 days. I believe March 16th is the deadline for a deal to be done, so we could be waiting another week with no news coming out of this. However, with a better than expected jobs number, could this market be putting in a bottom? With vaccines rolling out, are we about to normalize as an economy? However, I don't buy too much into the data because we did spend over 57% deficit spending in 2020, and that money was made out of nothing. We can't forget about all that money printing. But enough of the macro, let's take a look at our trending stock today, and that was Tesla. And today, Tesla was down 3.78%, with a market cap of $573 billion. On a year-to-date, Tesla is down 18%. Is Tesla on sale? However, when I just take a look at this chart, we're down over 40% from the highs set back in late January. When will we find a floor? Throwing some quick Fibonacci's on this, looking at the 61% Fibonacci, that's the biggest Fibonacci level there is, and that level is at $578. Call it around 580. So 580 is a big line in the sand here in Tesla, and you can see we wicked today. Looking at it intraday, we temporarily broke below that, but we got back above, and we're hanging on to this level. Now, going into next week's trade, let's take a look at its options chain. So we throw on any expected move, and next week they're pricing in Tesla's boundaries to play the upper edge at around 650 and our lower edge at 546. Call it 550. So 550 and 650 for easy math will play one standard deviation levels for Tesla. So at first, if we're going to roll over, that 550 should play very strong level of support. And then you just take a look at the Fibonacci level as well. That's 578. My guess is this is a very strong area for Tesla. So if you do believe in Elon Musk and think that this stock can turn it around, that's a great level to enter or start scaling into your position. However, as long as yield keeps on rising, it's going to hurt a lot of these growth stock names. So keep your eyes on what the 10-year yield wants to do, because if the yield reverses, this is a stock that could be on sale and could be trending to all-time highs before you know it. There you have it for the top trending stock today, Tesla. Did you get a chance to watch Tesla? Where do you see it going in next week's trade? And if you've watched this far, I really appreciate it if you guys can hit the thumbs up. It means a lot when you guys show some support. And if you're watching me for the very first time, I do these macro breakdowns every single day, and I sprinkle in a trending ticker. Show some love and hit that subscribe button. It will mean a lot if you guys can do that. Have any comments, questions, feedback for me? Leave it down below and I'll get back to you. I love when you guys comment. And on that note, I will see you guys in next week's video. Have a safe weekend. Take care. Peace.